Welcome to this video by Mr. Business Studies. Today we'll be looking at business finance and in particular cash flow forecasts. So the things you'll need for a cash flow forecast are the expected cash inflow for each month of the forecast and the expected cash outflow for each month of the forecast. Part 1 of the cash flow forecast is the monthly cash inflow. Now this is any money coming into the business which is measured month by month on the forecast. So it is important to remember that income from sales is shown when the cash is received and not when the sale is made. This is the part of the cash flow forecast that shows the monthly cash inflow. As you can see, it's categorised into capital, sales and interest. This forecast is done for a 6-month period from August to January, shown month by month, with the total cash inflow at the bottom of each month in the grey box. In August, the business received a capital injection of £30,000 from its owner, giving it a total inflow of £30,000. In September, the business begins its sales and reaches a total sales revenue of £5,000, with no other inflow gives the September total inflow £5,000. October, sales £8,000, with no other inflow gives a total of £8,000. November, sales of £10,000, giving a total inflow of £10,000. In December, sales of £13,000, giving a total inflow of £13,000. However, in January, sales of £15,000, with the addition of interest payments from the bank of £600, giving this business a total cash inflow for January of £15,600. Part 2 of the cash flow forecast is the monthly cash outflow. This is any money leaving the business, measured month by month on your cash flow forecast. It's also important to remember here that the outflow from purchases is shown when the cash is paid to your supplier, not when the purchase is made. This is the part of the cash flow forecast that shows the monthly cash outflow. The categories here are equipment, materials, rent, wages and miscellaneous expenses. However, these categories could be different for your business, so be sure to check these when making your own cash flow forecast. As with cash inflow, the forecast is done for the 6-month period August to January, shown month by month, with the total cash outflow under each month shown in the grey box. So for August, equipment costs £23,000 and rent was £2,000, giving a total cash outflow for August of £25,000. In September, our cash outflows were materials £6,000, rent £2,000, wages £2,000, and miscellaneous expenses £1,000, giving September a total cash outflow of £11,000. October and November have the same cash outflow expenses of rent at £2,000, wages for £2,000, and miscellaneous expenses at £1,000, giving a total cash outflow for October and November of £5,000. For December, materials cost £6,000, rent was £2,000, wages was £2,000, and miscellaneous expenses was again £1,000, giving December the total cash outflow of £11,000. With the same cash outflow for January as December, the total cash outflow for January was £11,000 also. Part 3 is the actual monthly cash flow forecast. This looks at the monthly balance, which is the cash inflow for the month minus the cash outflow for the month. The opening balance, which is the cash the business has at the start of the month. This is taken from last month's closing balance. And the closing balance for each month is the cash the business has at the end of the month. This is the opening balance for that month, added on to the monthly balance for that month. In this final part of the cash flow forecast, we take the monthly cash inflow and put it together with the monthly cash outflow. So if you take the monthly cash inflow and subtract the monthly cash outflow, you get the monthly balance, which is here. So for August, you take the £30,000 for total cash inflow minus the total outflow of £25,000, and you get the monthly balance of £5,000 for August. For September, the monthly balance is £5,000 minus £11,000, giving the monthly balance for September as minus £6,000. For October, this is £8,000 minus £5,000, giving a monthly balance of £3,000. For November, take £10,000 inflow minus £5,000 outflow, giving a monthly balance of £5,000. In December, inflow of £13,000 minus the outflow of £11,000 gives the monthly balance is £2,000. For January, you take your total inflow of £15,600 minus the total cash outflow of £11,000, gives a monthly balance of January for £4,600. So our closing balance for each month is calculated by taking the opening balance and adding the monthly balance. So for August, at the bottom we have 0 opening balance, add 5,000 monthly balance, give the closing balance of 5,000. September, the opening balance is £5,000, add minus £6,000, gives a closing balance of minus £1,000. So this means for the month of September, our bank account has gone overdrawn £1,000. So this may mean we are unable to pay some of our bills and may need to dip into our overdraft in order to pay our suppliers. For October, our opening balance is minus £1,000, add £3,000, gives a closing balance of £2,000, meaning we now have positive £2,000 in our bank account of cash ready to use. For November, we have opening balance of £2,000, add £5,000, give a closing balance of £7,000. For December, the opening balance is £7,000, add £2,000, give a closing balance of £9,000. And for January, opening balance is £9,000, add the monthly balance of £4,600, gives a closing balance of £13,600. Final figure on our cash flow forecast is the opening balance. This is last month's closing balance. So for August, this is 0 because we do not know last month, which is July's closing balance. For September, the opening balance is £5,000 because August's closing balance was £5,000. For October, the opening balance is minus £1,000 because the previous month, September's closing balance was minus £1,000. For November, it is £2,000 opening balance as October's closing balance is £2,000. For December, opening balance is £7,000 as November's closing balance was £7,000. In January, the opening balance was £9,000 as December had a closing balance of £9,000. So that concludes our video on cash flow forecasts. Thanks very much for watching, and if you did like the video, please click the like button, subscribe to our channel for future videos, and leave us a comment on what you thought about the video and perhaps videos you'd like to see in the future. Thanks for watching again. Bye.